Good day, everyone. Thank you for joining us today. And I am happy to be moderating this panel with 4 of our great speakers. I'll start with a quick introduction and then introduce our panelists and hopefully have a topic and some insights that would be very relevant and beneficial for everyone watching us. One of the biggest challenges for SMEs today, especially the startups growing quickly, is access to capital and funding. They can seek funding from venture capitalists, but those holding the checkbooks often get to dictate the terms, including the size of the stake entrepreneurs have to give up in return of the equity they are giving and in return of the cash they are receiving. So in response to this and other challenges facing startups and SMEs in the Arab region, while trying to secure funding, Dubai's Crown Prince, Sheikh Hamdan bin Mohammed bin Rashid Al Maktoum, announced in October of 2020 a new stock market for small and medium-sized enterprises, the Nasdaq Dubai Growth Market. SMEs are a key engine of our national economy, the Crown Prince said during the launch. This growth market is aimed to offer a relatively cheap and easy way to tap investors for capital. The first junior market geared towards smaller companies. It will make it easier for young businesses and SMEs to list, helping them achieve the next phase of their expansion by raising capital through an IPO. Additionally, the growth market wants to allow the listing of companies from around the world to help them expand in the region and internationally. This initiative will support the UAE economy by opening new horizons for its companies and by providing them with investment resources to expand their business and enhance their attractiveness in global markets. Based on this, I would like to start by introducing our amazing panelists, Mr. Tahrir Mahmoud, Head of Business Development at Nasdaq Dubai, Mr. Dafer Saleh Al-Qahtani, Founder and CEO at Bidaya Tech, Mr. Ali Al-Shalakani, President of the Middle East Angel Investment Network, and Mr. Walid Hassouna, CEO at EFG Finance. Allow me to start with Mr. Tahrir Mahmoud. My question for you, and it's quite a very obvious question that everyone is trying to get an answer for. What do you think are the challenges SMEs face, and why do you see a need for such a public market like the growth market dedicated to SMEs?
Thank you, Maya. It's a pleasure to be part of this panel and the AFE annual conference. SMEs play a very crucial part, not just in the region, but globally. Although regionally, I think they are more important because the economy and the markets are still quite young when we compare ourselves to other parts of the world. I believe here in Dubai around, I think it's about 80% of businesses are classified as SMEs. And one reason for this is because of the infrastructure that has been built in the city over the years. It's easy for someone to set up a business here, especially with all of the free zones we have and the various incubators and accelerators that are attracting more startups. And the recent changes the government has announced on 100% foreign ownership will definitely attract more businesses. Over the years, we've interacted with quite a lot of SMEs because they wanted to look at raising capital through an IPO. And this is because SMEs are facing challenges in raising capital. If we look at how SMEs can get access to finance today, there are 3 ways that come to mind. The first is financing from a bank. The second is venture capitalists. And the third is private equity funds for some of the larger companies. When it comes to bank financing, it's not only getting harder for SMEs, but it's also becoming more expensive. A number of SMEs have told me over the past few months that banks have approved them for financing, but the annual rates range from anything between 14% all the way up to 20%, 21% in some cases. Then you have the VC and PE firms, and we'll talk a bit more about them, but the issue I see with them is that we don't have enough of them in the region. There are some very good firms here, but when there's a limited number of them and the number of companies going to them to raise capital is high, like you said, the VC and PE firms are limited with the amount of funding that they can provide, and they can be very selective and turn away a majority of the opportunities. and dictate with those opportunities they're interested in the terms and how much they want to take. If we ask the question, why is it difficult to raise capital and in some cases very expensive? It's the risk that lenders and investors associate with SMEs. SMEs are seen as being riskier because most of them are at a growth stage and the projections they envisage can be harder to achieve. Then there are risks which we've seen over the years that affect the overall economy, such as the global financial crisis and the COVID-19 pandemic we're going through right now. Smaller businesses are less resilient to these risks, and so investors end up becoming more cautious. But on the flip side, SMEs can generate greater rewards if everything goes well and they have the right idea, the business plan, and support for growth. We all hear stories about how early investors in Amazon or Uber or Cream took the risk, and today they've really benefited from it. These are the stories we hear about every day, but there are numerous examples of companies that have grown very rapidly, and early investors have really benefited, which we don't hear about. We at Nasdaq Dubai first started looking at access for SMEs to the capital markets back around 2011, 2012. Um, sorry. Over the years, as markets developed, we realized the need was increasing and that the regulations we have in place don't limit an SME from doing an IPO on Nasdaq Dubai. The minimum market capitalization we had was $10 million, but the main challenge we found was the cost of doing the IPO. Our main market, on our main market, the DFC follows a sponsor regime, which means an investment bank needs to be appointed to lead the IPO. We were getting SMEs coming to us with the interest in doing an IPO, but when they would go to an investment bank, they would either get turned away because the transaction size was too small for the bank, or if the bank liked the story, the cost would be too high and the SME wouldn't progress. So that's where we spent some time with the regulator to see what changes need to be made to make it easier for SMEs to access the public markets through an IPO. And we realized that the cost was the major factor. So under the SME listing regime, which governs the growth market, the DFC removed the requirement for a sponsor and introduced the role of a compliance advisor. The main difference is that the compliance advisor doesn't need to sign a sponsor declaration taking on direct liability for the IPO and essentially ensures the company complies with the DFC's regulations. We also made it easier for younger companies to list. So instead of having 3 years financial track record, a company only needs a 1-year financial track record. And profitability is something that we've never asked for, which is a misconception people have when they think you have to be profitable to IPO. As I said earlier, SMEs can be seen as being riskier. So what we didn't do, unlike other SME markets, is reduce the disclosures the company needs to make. We still want good quality companies that are transparent to come and list with us. We want them to have high standards of corporate governance with policies and controls in place. And to give new investors that come in at the IPO some added comfort, we've introduced a mandatory 1-year lock-in period for all pre-IPO shareholders. So you won't see existing shareholders offloading their shares as soon as the company is listed. Another challenge SMEs face when it comes to raising money privately is the valuation. Many deals fail because the valuation an investor gives doesn't meet the expectations of the company. Whereas through an IPO, you're conducting a book building process. So instead of going to 1 or 2 investors to negotiate your valuation, you agree on a valuation range with your advisors, and then you let the market, which is a much wider pool of investors, decide what your company is valued at. And the finest challenge I want to mention is how much of the business entrepreneurs need to give away in order to raise the capital they need, something you mentioned in your introduction. I've seen cases where 40 to 50% of the company has been given away to investors without realizing that at some point, the company will need to raise more money at a future date. But sometimes it's too late and the founders end up diluting their shareholding way too early. This is where we only ask for a minimum of 25% of shares to be floated, giving the company an opportunity to raise further capital at a later stage. So we expect the growth market to address these challenges SMEs are facing and provide an additional means for SMEs to raise capital over and above what they already have.
Thank you, Tahrir. Thank you. I'll go to Mr. Daffer for my next question. tackling a bit the VC's role here. Where do you see VC stand when you start making the stock markets more attractive for SMEs and startups? How can you define the role of such investment and funding?
Thanks, Maya, for having me, and and pleasure being with you all. Uh, in general, we start with startups and SMEs as an ecosystem play very important and vital role due to their potential in terms of creating jobs and income, as well as nurturing innovation, creativity, and boosting enterprise in the region economies. Considering the existing constraints and the rules of startups and SME and nation building, it's imperative that the needed enabling environment be provided for these startups and SMEs to flourish and grow. Fortunately, in the recent years, some of the regional governments, through their regulatory bodies, created parallel stock markets like Nasdaq, Dubai, and Numu in Saudi Arabia, where requirements for IPO listing is less restrictive for startups and SMEs in terms of capitalization, free float, financial requirements, among others. Naturally, VCs, angel investors, shareholders, co-founders, and founders all will embrace the fact that exiting through IPO on any of their portfolio companies is accessible and available option. Equally, VCs will be encouraged and more inclined to expand their investment portfolio mandates. The availability of the option for listing in the stock market also mitigate the risk for investing in startups or SMEs and make them more attractive for investors as compared to being locked in for a long time and assuming the risk of business failure, apart from driving the cost of capital and slowing their growth. Additionally, the listing will give startups and SMEs in general better visibility with wider reach to investors and liquidity for shareholders in the same time. Besides acquiring publicity and credibility in the market, which will eventually lower the cost of capital and financing. As to VC in particular, they will definitely reap the benefits of parallel or junior stock market, as it provides them with attainable and solid exit while inducing growth for their successful portfolio companies, which match their ultimate exit strategy. Finally, we could only hope that the rest of the countries and the region create more parallel markets to institutionalize successful startups and SMEs alike, so they can contribute to the region economy and create more jobs through thriving IPOs activity going forward. Maya?
Yes, I join you. I join you in hoping for more initiatives like this to help our economy grow and minimize also unemployment and our SMEs, opening doors for them for more success. Mr. Walid Hassouna, adding to this and looking at your background, how do you think investors look at SMEs differently on the growth market compared to investing privately directly in them?
Thank you, Maya. Thank you for everyone on the panel. Let me first start by how we define SMEs compared to startups, because basically we're very active on both sides as EFG, and we're also active not only in equity, but in debt transactions. So the most important thing is that we look at SMEs different than normally how we look at startups, because startups are companies that are built for growth. So when you look at Uber, this is a startup. When you look at Kareem, it's a startup. And while if you look at a company that is a local logistics provider in Alexandria in Egypt, for example, this might be an SME. So we have seen a lot of changes in the past 5 years, especially in Egypt and other markets. And let me start first by SMEs, and then I'll talk about startups in details. On SMEs, the Central Bank of Egypt has been pushing a lot on lending to SMEs. And of course, the definition of SMEs would be relevant to a size of the capital or size of employees or even their revenue or turnover size. And has been pushing very aggressively on that and giving a lot of benefit to those SMEs, including, which is normally when you price your risk with SMEs, you price it higher than the other than your other loans to big corporate or blue chip companies. And this is one of the things that everyone, when they extend debt, and I'm talking here about debt, I'll come to equity in a bit, but on debt, usually price to SMEs higher, but the central bank has provided different schemes with lower interest rate to SMEs and asked for SMEs to be 20-25% from the total portfolio of the companies, of the banks. On the other hand, recently, and this initiative has been there for the past 4 years, as becoming more enforceable year by year. So it had made the banks in Egypt need to look on how to underwrite those SMEs, how to look at different ways of underwriting them. It's not the normal thing. It's not an easy thing to be done. And normally banks are not very happy with that because it increases the risk and difficult to underwrite. But recently, a month ago, Central Bank also issued another thing, which is very important, that usually when you look at SMEs, you want to look at financials, and unfortunately, financials, it's either not a representative of what's going to happen in the future, and usually the inception period is very difficult. And on the other hand, too, it does not give a real indication on the cash flow itself. So they have approved behavioral lending on certain limits. So with a turnover of around 20 million pounds a year, banks can use behavioral data for the purpose of underwriting SMEs, which I think it's a breakthrough because this is not how our old-fashioned banking work, and it's a big move and a big push from the central bank. On the other hand, because we are under the Financial Regulatory Authority in Egypt, and I'm sure everyone knows that the structure in Egypt is different. So we have non-bank FIs under FRA, and the banks are under the banks and payment companies under central bank. The FRA has made a lot of efforts to try to extend debt. Again, I'm talking about debt here, debt to different entities, and they already has published a law last month again for an SME financing license. So there will be it's a standalone SME financing license. We as AFG are applying for one, and this is going to give us a lot of room on how to structure different transactions. And we already piloted a lot of behavioral models for underwriting of SMEs, and we have been using this under our supply chain financing company, which is a factoring license. And hopefully by when we arrive to and receive the SME license, we can go into further details on that. So this is from the debt side. One thing that remains, and on the debt side, before jumping into equity and how we look at that. So one thing that remains that it's very important is the sukuk and bonds issuance, because basically we're trying to see there are a couple of funds that are going to be issued in Egypt that are going to work on movable assets. And this is going to help, especially with buy now, pay later. You know, fintech and e-commerce are the most common parts of startup, and both need a heavy balance sheet behind them because of the structure they work with. And we have seen some, we as EFG, we had made the first commercial paper in Egypt for a buy now, pay later company. And we have also helped with another commercial paper for the purpose of marginal lending. But on the other hand, those markets, despite the fact we have their ability in Egypt and Saudi, in the UAE and other markets to issue sukuk or bonds, those remain to be there is no real secondary market in them. So one of the most important things that we need to have an active secondary market on debt instruments, because in the absence of this, we still need to sell those products to very similar investors base and mostly banks that are going to hold them to maturity. And of course, the cost of issuance is very high because there must be a rating, must be certain types of due diligence and things like that. And I would like that if Nasdaq, as Tahir was saying right now, if Nasdaq has done a lot on the equity side, then definitely can do the same on the debt side, because they've done a lot, they removed a lot of the roadblocks for SMEs to list. So if they can do the same on that sides and on that side, then it gives a lot of market depth. On equity, we have been very active in equity. We have our own accelerator in Egypt, and we work. It's not Egypt focused. It's Egypt and Egypt and Arab world focus, which is very relevant to our discussion right now. And even it's relevant to. We also look at Arab guys with startups in fintech, e-commerce, and e-commerce related businesses, even outside the Arab region. So, and we have seen that a lot of those players, they are in need in cash at different steps. So what we do is that we have built an accelerator with the help of and in partnership with the the Ministry of International Cooperation here in Egypt. So it has also not only the talent and the use cases and the accessibility of EFG, but also the government support, which has been very important. And we have been investing actually small tickets of equity at a very reasonable valuation for the investors, and at very early stage, followed by follow-on funding from EFG itself, other than the accelerator, and then providing a good environment for use cases inside EFG along our companies, whether it is consumer finance, factoring, microfinance, payments, and everything. And then we do a lot of that transaction that are coupled with that structure at commercial prices, at market prices, not at venture debt prices. So overall, this is how we deal with startups, and this is how we deal with SMEs, and this is how deep the market is in Egypt right now. To sum it up, the most important thing right now is to create a secondary market for sukuk and bonds that are used to finance SMEs or startups. Thank you.
Thank you. Thank you so much, Walid. Very insightful on the current ecosystem in Egypt. Mr. Ali, thank you for joining us. What in your opinion would be the responsibilities based on what we heard about the role of VCs and the private sector? What would be the responsibility of government and support institutions to guide and help these startups to get and to reach the stage of being listed?
Well, thank you very much, Maya. It's a pleasure to be here. Thank you for moderating this excellent session. Very delighted to be with our distinguished panelists as well. So going back to your question, I think if you look at the world today, just to set a nice scene, we're in a very low yield environment. There is a huge appetite for equities. That's the only thing that's giving return, but also it's the markets of the future, right? Everybody knows that we are having a lot of disruption in traditional industries, and therefore the new space race is what's going to be what's going to be the next 10-year play, right? And I think that has spilled into sort of the politics between the US and China, because guess what? They are the most advanced when it comes to the markets and the products of the future, right? So with that sort of backdrop, and very different models, right? The American model, very much the pioneer of the free market, capitalism will work itself out. They do provide a lot of support contrary to that messaging, but not as much, of course, as the other alternative, which is China, very strategic, very long-term, very involved in pushing those things ahead. So with those sort of two models in mind, I think the question we have to ask ourselves in the region, which is, can we afford to be left behind? I don't think we can. I think if you look at also the countries in the region, they are split between oil importers and oil exporters. I think for the oil exporters, the writing is on the wall in terms of oil and gas. That's not a secret. This is part of the public policies and all of the different plans that have been set in place. So I think this question is an existential question. So we finally have a burning platform that says it's not a nice to have, it's a must have. And I think that one of the best things in the region from last year, in a very, very difficult year for humanity, was when oil hit negative, because that was a massive wake-up call that there's a limit to this, and you need to diversify your economies, and you need to really focus on the markets of the future. So with that sort of long preamble, I think governments have a big responsibility to push their markets and the society into the future. This will create prosperity and jobs and innovation and creativity that will have many side effects that are critical to really pushing our region forward. We've already seen in a very short period of time, when you take bold steps, innovative steps, what the results can be. The UAE was, I think, I would say, probably the pioneer in that sense. They really pushed hard to diversify and have focused on tech investing and creating the right infrastructure for the last 5 years. Saudi, last 2-3 years, huge leaps. And you can really see that they are providing even more support, because I think that they are taking a bit more of an aggressive position when it comes to catalyzing the ecosystem. So it's like, it's okay to take a first loss, second loss, third loss, because eventually you'll build an amazing market that will more than make up for those losses. And we don't have to make those losses. I'm just saying that you have to be a bit more aggressive to really create something innovative. And if you look at some Egyptian market, of course, I'm a bit biased, but huge markets, great opportunities for a lot of B2C businesses, quite diversified, so slightly different from the issues that you find in maybe the oil exporting countries. And you have many other great examples, and a lot of talent. I mean, we're so lucky; we have so much talent, that it's a shame that all of them have to, or traditionally had to, go to other countries. Now I think we have the opportunity to keep our talent and to also bring a lot of the talent back. And we also have the capital, because as much as oil and gas is going to be something of the past in 20-30 years, people are discussing when peak oil is going to be. I think even the most optimistic climate people will say 2025. So if we just utilize a portion of that and go away from some of the traditional investment classes, you have a huge opportunity to do this. So I think there is a big responsibility, but there's also a very big opportunity for those governments. There's a great opportunity for the private sector. We are seeing a lot more appetite. So when we look at the people today, they are looking at interest rates. Is it really, should I put all of my savings now in an environment where interest rates are falling down? And I think the credit risk of those also is less certain. I think there is now hunger and appetite for taking a bit more risk for a bit more return. And that's a perfect sort of, let's say, ingredients for also helping to finance these startups across different parts of the value chain. So I think the topic of today, we're really focusing on getting listed. Big opportunity. We still have a long way to go. And I think we don't have a lot of time. I think the problem is that we always believe we have time. The reality is that if you look at the SPAC world we live in today, SPACs, have closed their first deal. And if you think that this is the last deal, think again. Many of the people on this distinguished panel will have been approached by SPACs that are very hungry and are looking for taking our best startups and listing them on Nasdaq. Okay, the Chinese will do the same, and the Europeans will do the same. So, do we want to find that our best talent is listing in Nasdaq and Shanghai and London, or listing on our own exchanges? So, I think this is really the way it needs to be framed. It's an existential question, and I leave it to the governments to think whether, with that backdrop, it is something important for us to do or not.
Well, I hope they are listening carefully and working on grabbing those opportunities and making sure that we're not left behind. Thank you so much, Ali. And we will talk about the Anghami listing just after this question for Mr. Dafer, just to wrap up on this angle and kind of close this first part of the discussion. Mr. Dafer, what in your opinion is the short and long-term regional impact of the Nasdaq Dubai growth market on startups operating in the region?
The impact on startups in general, particularly the ecosystem, is positive for both short-term and long-term. And it's indicate the health of the economy with the growing stock market going forward. And it's aligned also with the growing economy in the region. From a startup perspective, and the vibrant investment climates like the one we are experiencing right now, IPOs can happen more frequently and smoothly at higher valuations. This is in line with the present trend of the surge in the startup ecosystem in the Gulf and the rest of MENA. However, MA and trade sales as an exit option continue to be the real dominant and the main target for both VCs and founders, as well as the early investor, due to the high valuation for final exit, which make it a strong competitor either to Nasdaq Dubai or Numu in Saudi Arabia or any other similar markets in the rest of the region. The final exit valuation for the startups to be listed are not only increasing in value, but they are also becoming less risky, which make them more attractive. And this has manifested itself that VC firms are more inclined to expand their portfolio companies and deploy more capital, since it's much easier than it has been in the past with the existing of Nasdaq Dubai and Numu of Saudi Arabia. And the results or the main objective is lowering risk and increasing return for investors. Presently, the growing VCs and angel investors ecosystem in the region will continue to contribute to the need for exiting through IPO, which complement the presence of Nasdaq Dubai or Numu in Saudi Arabia and other similar stock markets, assuming it provides them with the higher valuation that other than equity crowdfunding or M&A or trade sales. In the long term, Nasdaq market or Sumo for that matter will continue to increase in terms of trading volumes and number of listed startups, with the expectation naturally of a future market downturns and correction occasionally to interrupt such a growth as part of the market cycle. This will eventually slow down the startups from listing or make them seek other venues going after the valuation. The takeaway, or really from the big picture, is the fact that high valuation and market condition will always determine the method that startups will target for exit. And thank you.
Thank you, Mr. Dafer. So as we were just mentioning earlier this month, we witnessed the listing of the first startup from the region, Anghami. Anghami is the first legal music streaming platform and digital distribution company in the Arab world, which launched in November 2012 in Lebanon. And in March 2021, just earlier this month, Anghami became the first Arabic technology startup to list on New York's Nasdaq through a SPAC merger with Vistas Media Acquisition Company. Anghami was valued at between 220 million and 230 million dollars. So Tahrir, what took us so long? What hinders tech startups from raising funds via stock markets? What are the main challenges? How can we fast track this and get more Anghamis?
Good. So look, I think what I really find interesting on this panel and listening to the other panelists is we're all definitely on the same page here, and we all want the market to grow. Obviously, Angami news came out, and you know, from our perspective, yes, we want to see companies stay in the region, but it's definitely put the region on the map when it comes to tech businesses and international investors looking more closely at the region. And I've always said that, you know, when it comes to the international markets, they'll always look at it as a region as opposed to the individual countries to an extent. You know, what Ali was saying, how we need to sort of now look at how can we further develop to keep these companies here. Definitely agree on that, and I don't want to spend too much time talking about that, but looking more at your question. So look, we've only really been seeing a larger number of homegrown tech companies coming up in the recent few years, and there are two reasons I see for this. The first is that tech companies from outside of the region have really taken advantage of the rapid growth within the region and have expanded here, to an extent reducing the room for homegrown tech companies to flourish. And the second is that we didn't have the right ecosystem and the infrastructure in place to attract the tech startups. It was expensive to open a company here and bring staff on board, but this has really been changing rapidly recently. If I take the example of here in the DIFC, both the DIFC and the FinTech Hive have really made it easy and cost efficient for a startup to be established here. And they've created a great support ecosystem where established institutions can support the startups. Even the DFC, our regulator, is supporting fintech startups with their sandbox. And we're seeing this in other parts of the city and the country too. So that overall ecosystem that startups need, it's there now and it exists. And this is where we're seeing more and more startups coming here. I think with the growth market, I don't see why a startup, and I like how Waleed differentiated between an SME and a startup. And just for clarity, we're not targeting specifically SMEs or specifically startups, but we're using that general term of the SME. But for us on the growth markets, any company valued below $250 million. So it could even be those larger companies that don't want to classify themselves as SMEs. But when it comes to a growth market, I don't see why a startup will see any challenges in doing an IPO, because we really tried, as I said earlier, to clear the track for them. I think it's more of a mindset where a lot of entrepreneurs I've spoken to want to be the next Souk or the next Kareem and have one of the larger global players buy them out. For us, it's about education and making sure startups and entrepreneurs are fully aware of what it takes to IPO, and more importantly, what they can do today to start preparing for an IPO, whether that's in 1 year, 3 years, or 5 years down the road. And that's education, not just for the startups, but also for key investors, since they'll want to look at exit strategies. And just my final message is and this is obviously working in the capital market and foreign exchange, a key thing in a startup or a company looking to IPO outside of the region, one of the key points they have to consider is where are your stakeholders? Where is your customer base? Where do you really want to get visibility? And where do you need to list to make it easy for your stakeholders and your customers to get access? So yes, we've seen Angami go over to Nasdaq using a SPAC structure, but like we've seen in the past where large organizations were doing IPOs outside of the region, we've seen them come back today. And I think we'll see this with younger companies as well. Thank you.
Yes, thank you, Tahrir. I hope that we see more as well. So, Waleed, if you want to think about crowdfunding versus being listed on stock markets, in your opinion, what is the best way to guide startups, I would say, not SMEs here, to choose the most suitable financing medium? You're muted, Walid.
Yes, this is actually a very important question because crowdfunding is a major issue in the region we're in. And actually, there are a lot of bad experiences on collecting money from people and reinvesting it. Whether this, because this scheme has always been an issue, it has always been left to the banks or the stock market. So it's a heavily regulated business where we are. And I was hoping to see, I'm hoping to see, I mean, there's the fintech bill of Egypt coming out. Unfortunately, there was no crowdfunding in it. This is the draft I've seen. I'm not sure this is going to happen or is going to be added later. And crowdfunding is really a very important tool. The problem is the experience of crowdfunding in different countries is difficult. So you've seen what can happen in the US is different than what's happening in China, and China had like its peaks and troughs on that, and then it has to be very regulated. So I think for our market, unless Saudi, because Saudi actually is taking, as Ali was highlighting, Saudi is taking major steps to attract all the startups and attract different players to the market. Unless Saudi is going to sponsor the crowdfunding business in the region, I don't see UAE nor Egypt, which are the three major players in SME and startups in the region right now, will do something in this. Will do something that's aggressive. And frankly speaking, crowdfunding is the best way to finance if it's available. Unfortunately, it is not available. But on the other hand, let's be also realistic. There is a lot of capital available for startups, not SMEs, but for startups. And we have seen a lot of capital. We have seen valuations skyrocketing. We have seen some assets that surpassed similar companies in other mature regions. And we see this on the rounds when we invest in a new bank in the US and we invest in a similar thing in the Middle East, because the options here are very limited. We see valuations that are very high. So there is no problem on funding equity, definitely. I don't think there's an issue. I think also good and very good players in this market as startups are getting what they want. They're getting the checks they want, they're getting the valuation they want and the terms they want. But on the debt side, crowdfunding is very important. Still, I see it's not going to happen. So if stock market is active on bonds, securitization, commercial paper or notes, and if we have the right market makers, then we put it under a lot of governance in a manner that will allow that. But unfortunately, I don't see crowdfunding except 2-3 years from now. And it's going to be heavily regulated in the beginning. So it's going to be very difficult to access crowdfunding for 2-3 years unless Saudi will take the lead on that.
Thank you.
Can I insert something?
Question for Mr. Ali, and we will be wrapping up with you. Sorry, Mr. Dhafar, we're really out of time. We still have 2 minutes. And wrapping up with Ali, who, in your opinion, is responsible for providing startups with the help they need to choose their perfect fit in terms of financing platforms?
Thanks. So I know that we're almost out of time, so I'll make this quick and snappy, but no problem. So I think, look, it's a number of stakeholders. We've already talked about government a little bit, so I won't focus on them, but of course they play a massive role in terms of providing the right ingredients for this ecosystem to grow and to flourish. I think a lot of the big financial institutions are really taking very innovative steps. So I have to say, it's not just because Walid is here, but I'm a big fan of what EFG are doing. They're being very innovative in the market. And I think that the portion of MBFI financing in the Egyptian market is growing very aggressively compared to our traditional form of finance, which is bank finance. And I think we're going to be seeing a lot more interesting products coming on the debt side. And I think that's we don't speak enough about the debt side, and I think that's very important. So I'd love to see a bit more from that around the region. There's some models, for example, like revenue-based finance. I know that there's a few funds that are launching that, but that's a great way also to support SMEs, for example. Would be good to see that. And the final stakeholder I want to just mention, apart from, of course, the entrepreneurs themselves, but we've covered that ground, is I think for a lot of the wealth pools. So a lot of the wealth managers in the region who are sitting on really strong pools of capital, and there is the appetite for higher returns. They need to be a bit more aggressive, and I think whether it's the governments or the management of those, they need to become a bit more aggressive. And I think I agree with Walid. We're seeing that the most in Saudi, but it's not too late for the other countries to also take a bit more risk with those.
Thank you. Thank you, Ali. Thank you for all of our panelists. It was a great pleasure having this discussion with you. And thank you for the Arab Foundation of Exchanges and its partners for the amazing opportunity and the great work put together. I hope we meet in person again soon. Thanks again and have a great week ahead. Thank you.
Thank you.
Thanks, everybody.
Thank you.
Bye.
Bye-bye.
Bye-bye.